Hello everyone, welcome back to Fundrise Finance. Just like that, we have finished the first month of 2024, where the S&P 500 started the year slowly, but slowly started to gain momentum. And just when it started to hit new records day after day, it seems to have got a reality check towards the end of the month, and we saw a steep decline of over 1.5%. If you look at the year-to-date performance of the market, we mostly see the big tech companies which did really well in 2023 continue to do so even in 2024. We can see Nvidia up more than 24% just in the 1 month of the year. Microsoft is continuing its journey up almost 6%. Now, Apple is surely down more than 4% for the year, but the biggest loser from the Max 7 was Tesla, down almost 25%. That's a huge drop. When you look at the year-to-date performance so far of individual sectors, technology surely is doing good, up 3.5%, followed by communications 2.7, then healthcare at 2.25. The material sector has done the worst, down almost 6%, and real estate down 5%. So yeah, we don't know where 2024 will take us going forward, but one thing I can surely say is that a well-diversified portfolio with good quality stocks and ETFs will do good no matter what. And in today's video, I want to discuss how much my portfolio made as dividend income for the month of January. So without any further delay, let's check it out. Starting with my Fidelity portfolio, whose current value is $93,752. You can see in the last 1 month it's up 1.57%. Looking at the dividends in this portfolio for the month of January, we can see a bunch of payments from different companies. I did download all of them into an Excel sheet. You can see the month starts off with Walmart paying us $1.14, UGI Corp paying us $3.81, then Nike $1.48, Main Street Capital $1.13, Huntington Bank shares $2.55, FedEx $1.26, Best Buy $3.54, and ADP $1.05, the Devo ETF $3.29, JEPQ ETF $7.02, JEPI $8.88, Vici $11.79, the Qual ETF Amiga 15 cents, Pepsi $2.55, Merck $3.10, then International Flavors 60 cents, Chubb 93 cents, Philip Morris $2.97. Then we have Disney paying its dividend after a long time, paying us $1.80, and Amphenol 89 cents, Altria Group $20.49, Metal Properties Trust $23.13, Realty Income $1.58, Mondelez $1.73, Leggett and Platt $2.81, the IIPR $7.28, then Franklin Resources $1.82, WP Carey $3.51, Mindset Capital paying its second dividend for the month 99 cents. Then you have the QQQ ETF paying us 22 cents. Then Federal Realty Trust $3.14, Ecolab 57 cents, Medtronic $2.79, Intuit 90 cents, Comcast $4.67, Cisco $3.14, Oracle 80 cents, IDEX Corp 46 cents, Edison International $3.95, and JP Morgan $4.23. I track all my investments through Google Sheets. And the one we see here is for the Fidelity portfolio. Here we can see the annual income is $2,720.30. The yield just over 3%. So adding up all those dividends for the month of January, you finally get the value of $148.14. That's a good start to the year, I would say. Now compare that to the 2023 value, which was a meager $28. I know I did consolidate my Fidelity, Acorns, and Stash portfolios in the last 2 years, so it'll be unfair to compare year over year just for that purpose. Looking at the quarterly, we can see the Q1 value already inching closer to what it was last year. Annually speaking, hope to see by end of this year this 2024 bar growing higher than the 2023 one. Now the favorite chart of mine, the dividends by quarter, you can see here nice upward ladder growth. Now looking at expected dividends in my Fidelity portfolio for the month of February, here we can see payments expected from American Tower, AT&T, Verizon, Lowe's, Clorox, General Dynamics, MasterCard, Airports and Chemicals, Texas Instruments, Northwest Bank Shares, AbbVie, Abbott Labs, Accenture, AO Smith, Hormel Foods, Kinder Morgan, Morgan Stanley, Realty Income, Procter& Gamble, Caterpillar, Citigroup, Starbucks, Paychex, and finally Conagra Foods. Adding up all of these, we get just over 163 bucks, which is higher than the 148 bucks that we got in Jan. So yeah, good upward forecast already. That should bring our Q1 values higher, and by the end of March, that's the end of the quarter, this bar hopefully higher than what it was in last quarter. The second half of my portfolio, that's the Acorns. Here we can see the portfolio is $7,290. I expand it. Here we can see it's a simple portfolio with four ETFs, with VO, the large cap stocks, accounting to 55% of the portfolio, and IGH, the medium cap, that's 10% of the portfolio, and small cap, IJR ETF, that's 5% of the portfolio, and the remaining 30% goes into IXUS, that's for the international stocks. It's a simple set it and forget portfolio where I invest $25 every week. So that's $100 in recurring investment every month. On top of that, the roundups that it considers from all my credit card purchases, like we see here, $6.05, which recently got invested from the roundups. Overall, it comes down to around, I would say, $110 to $115 in a month. Simple passive investing. So this is a Google tracker for that. The portfolio generates income of almost $154 with a yield of 2.11%. Here you can see a split up of the portfolio among the ETFs. I made videos in the past how Acorns works, how it is perfect for a beginner investor. This is where I started my investing way back in 2019. I believe it was in 2018. I need to correct the graph over here. I can see the dividend from this portfolio starting at $8 in 2018 and then slowly inching up, going up to $125 last year. And there are no dividends from any of the ETFs in Jan. Most of them are the ones paying in the third month of the quarter. Now this is my overall tracker. The portfolio value of $97,482. Now this is just the portfolio value that is actually invested into stocks. I do have a cash position in my portfolio, courtesy my options on Verizon being called away. So here we can see the option transactions on Verizon in the last month. I tried to roll as much as possible, tried to manage the trade, but eventually just before the ex-dividend date for Verizon. So if you look at the Verizon's dividend details, you can see Verizon had its ex-dividend date on Jan 9. The option got called away, leaving me with a cash of close to 5,000 bucks. So that's the cash sitting idle in my portfolio right now, collecting almost 5% in interest from the money market accounts until I figure out where to deploy it. So what we saw the details was from Seeking Alpha, an amazing site to do your analysis on the stocks and stuff. Here we can see different articles written by the authors on the site. We can read some news articles. We can see some custom ratings from Seeking Alpha themselves, which are really useful. So yeah, an amazing site to look forward to. And if you're really interested in it, there's a promotional link in the video description, using which if you subscribe to Seeking Alpha, you will be able to get $50 discount. Really worth it. Hope you check that out. Now going back to the overall portfolio, you can see the income generated here, $2,874 annually at a yield of 2.95%. So the final value for the month of Jan is 148 bucks and 14 cents from the Fidelity portfolio. And looking at this annual chart here, right? You see here 2018, I started my investing journey towards end of 2018. And you see here it was like a meager amount of 8 bucks as dividends. Then the value rose to 83 bucks by 2019, then 200 bucks almost by 2020, then 2021, 515, then 2021, 514 bucks, then 2022, almost 1,350 bucks there, 2023, 2,350 bucks almost, and then 2024, just starting. So yeah, really hoping to see this value higher than 2023 by the end of the year. And this is the chart I like the best of all to show how the dividend snowball happens. Nice laddered upward growth. We're going to see like the Q1 value for 24 beating out the 23 Q4 value. So yeah, as we just saw, as long as we invest into the stock market, into good quality stocks and ETFs, such portfolio will always do good in the long run, no matter what happens in the market. There are many factors day in, day out trying to push you back. No, stay consistent, stay invested, and you will reap the rewards in the long run. So that's all I want to discuss in this video. Hope you all found it valuable, and if so, I would really appreciate if you could hit the like and subscribe buttons so that YouTube can suggest this video to many more people out there, and that would really help this young channel. And also, please do share in the comment section how much did you generate as dividends in this portfolio. Where are you investing currently? Let's keep the dialogue going ahead. Okay. So until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See you. Bye.